Welcome. In this video, ZBCN coin hard fall is over. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A careful examination of the chart reveals that the price is currently moving under a very prominent descending trend line. This line has formed by connecting previous higher highs and has become a visual representation of the bearish pressure the market has been exhibiting recently. Such descending trend patterns clearly reveal the psychological behavior of investors. This is because each new uptrend ends at lower levels than the previous one, indicating a market environment where sellers still dominate. The duration and structure of the current downtrend shows how strong a line of resistance this trend is in terms of technical analysis. The rejection of upside moves every time the price approaches this line suggests that there is still hesitation among market participants and that confidence has yet to be fully established. However, it is a well-known fact in technical analysis that every trend ends one day. The important thing is to be able to identify at what point and with what signals. Right now, the price is very close to this falling trend line. This technically signals that the moment of decision is approaching. This means that the price's interaction with this line will be decisive for its direction in the coming period. If the price crosses this trend line with an upside breakout, it could indicate that the momentum has shifted to the buyers and sellers are now finding it difficult to resist. Such breakouts are often a harbinger of a new bullish wave. Especially if the breakout is supported by a strong volume increase, it's a more reassuring signal for traders. However, it's not enough just for the price to break above the line. For a true trend breakout to be confirmed, the price must settle above this zone and, if possible, continue its ascent after testing this level as support. This type of movement is called a breakout plus retest in technical analysis and is one of the most reliable methods to understand whether the breakout is valid or not. If the price successfully passes this test, the previous highs will become targets one by one, and there is the potential for a new uptrend to begin. However, the other possibility should not be ruled out. If the price reaches this falling trend line and fails to break it again and turns downwards, this would indicate that the trend is still strong and sellers remain in control. In such a scenario, the price may retest the previous lows or even move even lower. Such rejections may cause stop-loss zones to work and increase selling pressure, especially for short-term traders. The break of falling trend lines is often a critical turning point, not only in terms of technical analysis, but also in terms of investor psychology. This is because such breakouts feed the perception that the decline is over, a new uptrend is starting, and this perception can have a domino effect on the price. This would encourage more investors to buy and accelerate the upward momentum of the price. However, if this expectation fails to materialize, i.e., if the price fails to break out, hits the falling trend line and turns down again, the selling pressure increases as investors who had hoped for a breakout start to close their positions. In this context, a trendline breakout is not only a crossing of a line, but also a change in market perception, momentum, and psychological balance. So, if the price fails to break this falling trend line, it means that the downtrend is still valid and the market is preparing for a correction. Especially in such a scenario, an increase in volume while testing the support zones indicates that the decline will continue strongly. Considering all these scenarios, the current price action represents a critical threshold where the question of break or rejection will become clear in terms of technical analysis. Here, traders should always set stop-loss levels, prioritize risk management, and not ignore supportive factors such as trading volume. The persistence of the price above the trend line should also be monitored to distinguish whether the breakout is fake or real. But we can't decide the analysis with trends alone. Let's look at other metrics. Stay tuned. Looking carefully at the chart, it is noticeable that the price movements have started to take on a very distinct structure. In particular, the fact that the price has formed a new local peak as a result of its recent upward move may have started to signal a positive change in market dynamics. After such rises, one of the most important factors in terms of technical analysis is how the price will retrace after this new peak and at what level this retracement will end. Because the bottom that will form after this point provides us with important information about whether the trend will continue or not. This is the situation that needs attention at the moment. The price has pulled back a bit from the last peak and is looking for new support. Such pullbacks are normal in technical analysis. No price movement goes up or down all the time. What is important, however, is the level at which this correction will be completed. If the new low point formed as a result of this retracement remains above the previous low level, this indicates that a rising bottom structure has formed, which means that the uptrend continues in a healthy manner. Rising bottom structures are extremely valuable for trend-following traders, because if higher highs and higher lows are forming in a market, this confirms that the market is structurally trending upwards. In this case, traders may prefer to take buy positions from the new low. Moreover, the formation of this structure is a very positive development not only in terms of technical analysis, but also in terms of market psychology. This is because investors start to reference higher levels rather than lower ones, which increases the appetite for buying. The structure currently observed on the charts may point to exactly this scenario. The price seems to have entered a controlled correction after forming the last top and is looking for a new support level as a result of this correction. If the price reacts upwards from here and starts to rise again somewhere above the previous low without breaking through it, this is called a trend continuation pattern in technical analysis. Especially if this rising bottom is supported by strong volume and positive indicator signals, the uptrend can be expected to gain further momentum. The formation of rising lows is a signal not only for technical analysis, but also for algorithmic trading systems. This is because many automated trading systems are configured to increase their buy positions when higher lows and highs occur. So when this happens, not only manual traders but also bots and large funds are more likely to increase their positions. This could cause the price to move up faster and with more volume. Another important detail to pay attention to at this stage is the nature of the price's movement immediately after the rising low. If after this point the price only makes a short-term rise and then retraces, this should be carefully analyzed. However, if the price has turned strongly upwards, breaking resistance levels and attempting to break through the previous high, this is one of the strongest signs that the trend is now clearly turning upwards. However, such structures can sometimes also be confused with trap moves. That is, the price may first form what may look like a rising bottom, but then break through it and make a sharp move to the downside. Traders therefore need to pay attention not only to price patterns but also to the volume profile, candlestick patterns, indicator signals, and general market conditions. However, if all of these elements come together, it is possible to say that this rising bottom is the beginning of a healthy and strong trend. To summarize, when the price makes a new high followed by a correction and then starts to rise again from a point above the previous low, this is considered a trend continuation signal in terms of technical analysis. Analyzing the market dynamics, the RSI indicator shows a remarkable technical structure. On this indicator, a descending trend line that has been exerting pressure for a long time has finally been broken to the upside. At first glance, the RSI's breakout of this trend may seem like an important technical signal that could spark a bullish breakout. But it is important to note that not only the RSI breakout is not enough, but the price must also confirm this signal by breaking the descending trend line to the upside. Otherwise, the movement on the RSI alone can be misleading. A falling trend breakout on the RSI is considered a very positive development in technical analysis. Especially if the RSI is below 50, it means that the selling pressure in the market is beginning to subside and buying power is gradually coming to the fore. Such breakouts are usually early signals that the price may make an upward move in the future. However, the critical point here is whether this breakout in the RSI is supported on the price chart in the same way. If the RSI breaks to the upside but the price is still under the pressure of the downtrend, then this move in the RSI is either a leading signal or a fake breakout. Therefore, the strongest structure to support a breakout in the RSI is if the price also breaks its own falling trend line and heads higher. In this case, both price and the RSI move in the same direction, which is called signal coherence in technical analysis. This means that if the RSI and price break the trend together, the bullish possibility becomes much stronger. However, in the current situation, only the RSI indicator has broken the downtrend, while the price still hasn't done so. This means that traders should be cautious. In such scenarios, traders need to evaluate the RSI data in tandem with the price action and not just in isolation. When the RSI breaks the falling trend line, it indicates that the momentum has lost its downward momentum and there is a strengthening on the buy side. However, for this positive development to be sustainable, the price must accompany this signal. Because if the price still maintains the descending top descending bottom structure, the rise in the RSI may remain only an aberration. Especially due to the nature of the RSI indicator, such divergences can happen frequently. The RSI sometimes gets ahead of the price and gives an early warning signal. RSI has made a breakout, but we should wait for it to break the price trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.